In this chapter, we'll discuss the four main types of taxes that typically are relevant when selling a business. These include capital gains tax, corporation tax, value-added tax, VAT, and income tax. First, let's look at share sales. With a share sale, typically the seller would be expected or would end up paying capital gains tax on the gain made on the sale of those shares. On the other hand, typically with a share sale, there is no VAT, no corporation tax, and no income tax payable. Moving on to asset sales, which are a little bit more complex. First, we might have corporation tax payable by the limited company that disposed of assets at a profit. Second, it might be possible that HMRC decides that VAT might be payable on some of the assets that have been sold, but this is typically avoided by arguing that the sale, the transaction, was the sale of a business as a going concern. And lastly, we might have income tax and capital gains tax considerations when trying to extract the money from the selling limited company, because again, it's the limited company that sold the assets to the buyer, and therefore it's the limited company that receives the money. So then we need to extract the money, and therefore we might again have those capital gains and income tax considerations.